The short answer is it appears to be massive fraud. I think one thing we can do ahead of time is to say everything is alleged or appears to be, because obviously the lawyers have to go through this,
Yeah.
in detail. But obvious scams are obvious now. Now that the documents are out, now that things are less opaque than they were before, and basically it's like you have this offshore exchange that had inappropriate connections with their trading arm, and we're using, appear to be using customer funds to finance their trading, and we're using their own token created out of thin air as collateral for loans. And so we appear to have actual fraud, various types of fraud, essentially a Ponzi scheme. And that's different from even just a normal casino, right? I mean, if you can have a crypto casino and it makes money from fees, and most traders get wrecked. But this is like a casino built on top of a Ponzi. So this is like, among the worst of the worst. So from the beginning, there was red flags. And not all those documents were publicly knowable, right? They were, to VCs and financiers and things like that. And so it started out as that trading arm. And then that was like 2018. And then 2019, they launched FTX, which is the exchange. And it appears that a large purpose of the exchange was essentially to provide low-cost capital to Alameda, which are supposed to be separate entities. But it's clear now that they were, and it was kind of understood all along by a lot of traders and observers that there's some sort of probably uncouth connections between the two. But this, as more details come out, you see how intertwined they appear to be, and how kind of FTX was really almost like a way, like a mechanism to extend Alameda and their trading activities and their leveraging. But I think from early on, they had some sophisticated trading that can work temporarily, but especially once you start printing your own token and then leveraging that token, you start building a more and more fragile Ponzi. So I think it very much got out of hand, but there were red flags in those documents from the beginning, at least for those who had the access to see those documents, which were not very public documents. Yeah, including FTX US, which was again supposed to be separate and regulated differently. During this, as this was playing out in many now deleted tweets, first they're saying funds are safe, and then they were kind of admitting that funds were not safe. They were like, well, FTX is still safe, but then even FTX US is doing bankruptcy. So, kind of across entities, it's all intertwined. And there's actually shots of their organizational chart, and it's an absolute mess if you look at it. It's
find it?
I'll have a
it's
look,
almost purposely obfuscated the way it looks. If we kind of back up to how we got here, so touching back on the macro for a second, because a lot of these things start with macro. You have rising liquidity environments and you have falling liquidity environments. And most of these, like, let's say all these, Bitcoin and altcoin like booms that happen, because they happen generally at the same time. When you have a rise in liquidity environment, that's where they've all occurred. They've all occurred when money's flowing, money's cheap, risk assets in general are doing well. And then when that rolls over, the economy's slowing, Federal Reserve's tightening, there's various reasons why this can happen. And you have this like declining liquidity environment. All these Ponzi's break. And then even Bitcoin takes a price hit as capital goes out and euphoria goes away. And the difference is, Bitcoin's been through 4 of these, and it, keeps making higher highs and higher lows, at least so far, and other ones go through 1 or 2 cycles, and then they're just, they're dead in Bitcoin terms pretty much forever. That's historically what's happened with thousands of these projects. And so we've, ever since, roughly mid 2021, we've been in a declining liquidity environment, and it really accelerated here in 2022. And so all these speculations, all these risk on things start pulling out. And then when that gets pressured, you find out who's, to quote Warren Buffett, swimming naked. Who's more levered in an opaque way than maybe market would have thought. And so, for example, there were a bunch of us pointing out Luna and Terra, that intertwined system, as a gigantic vulnerability. And I wrote about that a lot. That was the good thing about that, among the terrible things, is that it was transparent. And so you could be like, no, this is we can map this out. This is a problem. And a bunch of people did. Then you have Celsius, which was well known as being sketchy for a long time. And there are a lot of people kind of calling that out. It's a little bit more opaque, obviously, than something like Luna, but it was pretty well telegraphed. So when Luna goes down, all these things fall. Celsius is heavily reliant on their token. That's getting pressured. And then the surprise to a lot of people was 3 Arrows Capital, because that was more opaque, and they were considered smart money. and they went down, and that hurt a lot of lenders. And you had contagion in the whole industry. All this intertwined leverage was more intertwined than people thought, because again, a lot of it's opaque. And then you had, FTX and Alameda come in and provide liquidity to some of these. And I think a lot of people rightly pointed out that, he was positioning it like, oh, I want to save the industry, I want to be altruistic, but really he's intertwined with them too. And so they want to mitigate contagion so it doesn't bring them down. But then the question is, how, people obviously, again, because of opaque balance sheets, you couldn't be sure how deep their pockets are. Are they like on the verge of solvency, or are they just, they medium, or are they as deep as they claim, right? And so a lot of people, I think, rightly pointed out that they're probably doing this to save themselves. And so there was like this, this kind of lull in the market where it's not making new lows, there's no more blowups, or at least big blowups. And then it was leaked that what their balance sheet looked like, Alameda's balance sheet. Yeah. I think CoinDesk had a report on that. And what it showed was that a lot of so you have assets and you have liabilities. And of course, the difference between those is your actual equity. And the problem was that a lot of their assets were basically make-believe. They're these illiquid tokens where their own token, the FTX token, they can print billions of it, give themselves most of it, sell a little bit to the market, and have that trade and have like a quote unquote trading price that they can probably manipulate on their own exchange to some degree. Sam would post his own like buys of his own token every week, almost like encouraging retail to keep buying.
It's so obvious in hindsight.
So once that leaked, I mean, a lot of people were like, "This is a giant red flag," because not only that, if that equity if they ever had to sell that, they would not be able to, because once you start selling, 100 billion of that, the price is now so crushed. Good luck offloading the other billions. So you don't really have the value that you claim you do. And then they also held other tokens that they didn't control, but they were just, they were fluff, right? They're just fluff. Many of them were down significantly. And so people were like, wait a second, if this is their actual balance sheet, it's like, well, how can you verify? Do they have another balance sheet? And, so people could still not be 100% sure, but that was like basically a major vulnerability was now pretty clear. And that's when a lot of people started analyzing that a lot more. And then, Binance comes in because they held some of those FTX tokens.
Was it like 400 million, 500 million?
Something like 500 million.
Yeah.
How did they get those tokens?
They had previously invested in FTX.
Right. I think they were one of the very early investors.
Yeah.
So they backed FTX, and therefore they had
exchange for the token.
Yeah. Okay.
And then so they started selling their tokens with CZ coming out and saying, like just for prudence, we're going to sell these. We don't want to repeat a Luna. Like, simultaneously adding to selling pressure while also using language to show that you're concerned about it and show risk, which makes other people pile on, shorts pile on, other people sell. And then Alameda came out, the CEO, and she said, we'll buy all those tokens from you at $22.
Is that Caroline?
Yes.
Yeah.